Hey everybody, welcome back to Actual Investing. I just wanted to make a quick video because one of my favorite stocks, Adobe, is up about 15% after hours after reporting their second quarter 2024 earnings. So let's take a look at what's going on with Adobe. First of all, if we look at the year-to-date performance for Adobe prior to this, they've actually been down 21% year-to-date, while the market has been hitting new highs. So part of this rally may just be the stock catching up a bit. But let's find out what the actual release says. I'm going to start with Adobe's release from last quarter, Q1, and see what they were expecting for this quarter. So if we scroll down here, this is the previous release. They were expecting for the second quarter, which just happened, 5.25 to 5.3 billion. And of course, they released their earnings in a PDF. Love it. Okay, so at the high end, they were expecting 5.3 billion in revenue, and they made 5.31 billion in revenue, so they beat the high end of their expectations. That's awesome. If you look at these comments from the CFO, it says they're raising their annual targets for Adobe, so that's amazing. And it sounds like the CEO is blaming their differentiated approach to AI. This is something that I've talked about quite a bit on my channel, but I do believe that Adobe is a generative AI stock really at its core. I think they're still building out how they're going to monetize their generative AI offerings, but I do believe that as generative AI becomes more and more pervasive in our lives, Adobe is going to stand to benefit because they really have all the tools. They just need to go ahead and monetize that to their users. So let's look at guidance because at the end of the day, Adobe is kind of a growth stock, so we want to see what's going on in the future more than what happened in the past. So for the third quarter, they're expecting revenue of 5.33 to 5.38 billion, which is a nice steady stair step up from this quarter. And something they didn't do last quarter is provide a full year fiscal 2024 guidance. And they did that this quarter. So I think that's another reason why investors are happy. They finally have some certainty. Whereas last quarter, I think Adobe's stock dropped maybe something like 15% because they didn't provide full year guidance. And their second quarter guidance was a bit of a sandbag, right? So they beat that sandbag guidance, and now they're giving us full year guidance that actually looks really good. Total revenue for the year is expected to be 21.4 to 21.5 billion, which on the high end, that's about a 10.7% year-over-year revenue growth number. So Adobe still just barely growing double digits year over year. I love to see that. So they also posted this cute little Q2 2024 fiscal highlights page that just shows that things are moving in the right direction for the most part. Total revenue, of course, like we said, is up about 10%. We should see that accelerate in the second half of the year, according to their full year guidance. We have earnings per share that's also accelerating year over year, and really strong operating margins of 36% on a GAAP basis and 46% on a non-GAAP basis. For me, I typically look at non-GAAP because it excludes one-time events and usually is a bit more accurate to the full picture of what you're looking for. So Adobe, just a very profitable company with a bright future that is still growing. I'm going to do a quick search for AI on their earnings presentation and look at that 59 instances of the word AI on their earnings presentation. So AI is clearly still the buzzword, and just this paragraph alone, it looks like it's in here like 10 times. Granted, you're going to get some false ones because things like training have the word AI in it, but for the most part, we're seeing that Adobe is really playing the AI card here. Firefly, which is their generative AI offering that they've been giving out for free but hope to monetize in the future, has already generated over 9 billion images. So it's clear that people are testing this out and are finding value in it. And it's not just Firefly. They're also monetizing new AI technologies in their digital media and digital experience businesses. So these are things like Creative Cloud, which is their top selling product. Another nice thing about these results, which we can see in this transcript, is that Adobe did generate almost $2 billion in cash flows from operations this quarter, which is amazing. And they've also planned to buy back $2.5 billion worth of shares, which is amazing. I love when a stock buys back their shares. It's essentially like a dividend without the freedom of what to do with it. They're just reinvesting back in the company. And I like to see that, especially for a highly profitable company like Adobe or like any other software company. So on first glance from this earnings report, I can see why this stock is up. This is just a very reassuring report and gives us a lot more certainty than the previous report did. I don't think the stock deserved to be down 15% last quarter, so I don't really think it deserves to be up 15% this quarter either, but I believe it's just catching up to where it was. So I guess the relief rally kind of makes a bit of sense. All right, so let's take a look at my spreadsheet now and see where Adobe sits. So this is my spreadsheet that I use for tracking growth stocks. I rate these stocks on 4 factors, and those factors are gross margins, annualized revenues, price to sales, which is a valuation metric, and quarterly year-over-year revenue growth. Out of these 4 factors, you can get a score of -1 to 5 for a total possible score of 20. The highest on my sheet right now is 17.8, but my average is around 12. So Adobe is currently about the 13th highest stock on the list, with a score of 13.3. So that is well above average and is quite impressive because pretty much all these stocks on my list are good, high quality companies. So the thing that I like about Adobe is that their valuation actually does make sense. When we look at price to annualized sales, it's less than 10, which is quite good for a software company. Typically, software companies do see higher valuations, and especially a company like Adobe that really does have this beautiful sales funnel. They get people in the door with their free offerings, and then they can upsell them into things like Creative Cloud or into subscriptions. Adobe is also kind of an industry standard, so a lot of times it's hard not to use Adobe. They're very sticky. The other thing that's nice about Adobe is as the software company, they have very high gross margins of almost 90%, which is amazing. Like I said, they're growing at double digits year over year, and they're highly profitable. They're not spending too much on SG&A or R&D, so a lot of those gross margins go right to the bottom line in the form of that operating cash flow that we talked about earlier. So all in all, a great quarter for Adobe. If not somewhat expected, I think I kind of expected them to beat that sandbagged guidance. However, it's nice to see that they did provide the full year estimates and things are looking like around an 11% year over year growth rate for revenue. So I like to see that. I like to see Adobe being back up. If you're on the sidelines of Adobe stock, I do still feel like the stock is at a reasonable valuation. So if you're looking to get in, it would have been nice to get in before the 14% pop. However, if we zoom out a bit, on a year basis, the stock is still down, so really Adobe has not done anything for the past year. So even with this rally, I think you're still getting a very good price for Adobe. Like I said, price to annualized sales of less than 10. It might be over 10 tomorrow, but still very reasonable for a software company that is growing just barely at double digits, that is highly profitable. And if we look at other valuation metrics for profitable companies like the PE ratio, we see that the PE ratio is about 44, which is honestly quite reasonable for a company that's still growing very quickly. So all in all, Adobe is a stock I like. It's a stock that I will be holding. I think they're going to benefit from generative AI. They're going to benefit from cloud computing. They're going to benefit from the rise of independent creators who use their Creative Cloud system. So I think that Adobe has a lot going for it, and I'm very happy with this earnings release. I hope you guys all enjoyed the video. Please hit the like button if you liked it, and please subscribe if you're new. I put out content doing these short little 10-minute deep dives on publicly traded companies, giving my thoughts and sharing my portfolio decisions along the way. So if you like that, please subscribe. Thank you guys so much for watching, and I hope you all have an awesome day.